Yeah. So that number one thing I would say is that anybody can do this. You don't need to have money. You don't need to be super educated. It really just takes hard work and hustle, and making connections. So you can do this. It is, and most real estate investors came from modest beginnings, start small and grow from there. And you're going to learn as you go. You can't know everything. You sometimes you just have to jump at it, find a good deal and just take the plunge.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey, everybody. Welcome to the Real Estate Pros podcast. I'm your host, Michelle Kesil. Today, I'm joined by someone I'm looking forward to chatting with, David Giovanniello, who is a real estate investor, primarily focusing on multifamily units for the past 28 years. So excited to have you here today, David.
Yes, excited to be here. Thanks for having me.
Of course. I think our listeners are going to take something away from how you're approaching finding deals and good opportunities. So we can dive in.
Sounds good to me.
First off, for those who are not familiar with you and your work, can you share what your main focus is?
Well, my main focus now is small multifamily where I can find opportunities to add value. So I stay in markets that the large pension funds, banks, REITs, they stay away from, usually 30 units or under in the residential multifamily. And I look for opportunities where I can add value, not just by renovating, by proper management, or finding ways to improve the way the business is operating.
Awesome. And what markets are you operating in?
So primarily I'm in London, Ontario, Canada. I do have a building in St. Thomas, which is a small market just outside of London. And then I do have a small Airbnb property in Costa Rica that has got me testing the international waters as well.
Awesome. How did you get started as an investor?
Yeah, so I got started when I was young. So I had got my first full-time job and I thought there's no better way than to buy a house and rent out the other unit. Nowadays, they call that house hacking. So I bought a duplex. I lived in the upper one-bedroom apartment and I rented out the lower. That allowed me to live for free and be able to save some money to buy a second, which that second property was a student rental. And from there, I've learned different ways and I've fallen into the model of multifamily is what I prefer today. But I still have that duplex now, which was now 28 years ago.
Amazing. And now you're mostly doing multifamily. Can you expand on some of the type of investment strategies that you currently dive into?
Yeah, so I started with the duplexes as a smaller multifamily. And then I grew, after that point, I got a fourplex, sixplex. And then from there, I learned how to scale the business. And so I would buy what I would call buying smart, buy well-located properties in that market where the REITs and pension funds and banks and insurance companies are staying away from. And so the big players aren't playing in the sandbox. So I can compete a little better. In this situation, I find seller financing a lot of time, or I'm able to use other people's money because there's less competition, more mom and pop sellers.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So I'll buy smart, use other people's money to purchase the property, and then the goal is long term. And when I mean long term, I mean forever. My plan is not to sell these properties. It is to refinance, to buy more, and eventually hand off to my children. And then I add value. And so in multifamily, the beautiful part about adding value is it's not just about renovating the property. If I can increase the net operating income, I can increase the property. So I have a building right now in St. Thomas that I have a sign that's going on the side of the building. A company's renting the building side of the building from me, and they're paying me $1,000. So at a conservative 5 or 6% cap rate, I'm going to get $200,000 in added value just from that sign. So I look for opportunities like that to add value, increase the net operating income, and then at that point, refinance and then look for my next opportunity.
Awesome. What are some of the main keys that have made the biggest difference in allowing your business to be able to grow and run smoothly?
Yeah, so for me, it has been to find good partners that allow me to operate the business and finding properties that have the ability that are being undermanaged or not managed properly. So being able to buy these under market value, increase the value, this has really allowed me to grow and get ahead in this business. And I also do it in a way that, there's a lot of young hustlers out there that would work the same way. I just don't give up. I find a property and it's not even for sale. I just see a for rent sign. I bought one of my favorite properties from a for rent sign that was an old school just for rent with a handwritten phone number on it. I called that man for 6 months straight wanting to buy his property. He didn't want to sell, but he was older. I could tell he wanted to retire, and I was able to find an opportunity by nonstop, just not harassing, but hustling to the point where he was ready to sell. I was the first person he talked to with no competition.
Yeah, amazing. And how are you currently finding the best opportunities for properties? Is there a specific way?
So there's no specific way or best way. I do a lot of things. I've been doing this thing for 28 years. So I do a lot of how I work is old school. I still drive for dollars. And if listeners, I'm sure listeners for this podcast would know, but I drive and look for opportunities like that for rent sign or properties that look like they need work and they're not being managed properly. If I see grass on a building that's not being cut, I'll contact the owners or find a way to contact the owners. And I also look for Facebook, Facebook ads and Facebook Marketplace. I look for ads from mom and pop investors who are putting it for rent. Maybe they're getting sick of being a renter or being a landlord. And so I'll approach them that way and start a conversation to see if they're interested in selling. And that's how my opportunities seem to come.
Amazing. That's so cool that you're able to, yeah, approach things in that way. When it comes to financing, is there a specific strategy you have for that?
There's no specific financing strategy that I have besides I'm trying to use, I just closed on an 11 unit building on December 12th. And with that building, I have none of my money in the property. So I have seller financing and small joint venture investment. and then I split the property with that investor 50-50. So I look for ways that I can not have my money in the deal. I'm going to have most of my hard work and sweat in the deal. In Canada, why I like multifamily is it's a commercial mortgage and they don't finance me, they finance the property. So if I can find a good deal, I can find someone who's going to finance that property.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So that makes it a lot easier. A lot of investors, especially here in Canada, and I'm sure it's a situation in the States as well, is when you start to get 2 or 3 properties, the banks start to penalize you and they think that your debt ratio is too high. And so when you have multifamily, they're doing the financing on the property, not yourself. So I find that for me has allowed me to scale and grow, and it allows me to use either seller financing or joint venture partnership money.
Yeah, definitely. And has there been any challenges that have come up through that you've overcome?
For sure, there's been challenges when I was starting to grow. That's what I was finding. I had, 5 or 6 properties and the banks started to say no to the smaller properties. So that's when I pivoted to bigger. I also used private money or seller financing at first, refinance the property. So once I was able to add value to the property, I could refinance that with the bank to a property that was at its full potential and then pay back the seller or the private money. So I was able to pivot when I wasn't able to get the financing on the smaller, go bigger and use private money.
Yeah, amazing. It's important to know how to pivot in this world.
For sure, especially in this day and age.
Right. What are you most focused on solving or scaling to next in your business?
For me, the idea is to continue to scale on the trajectory I'm on now, which is a slow and steady pace. I'm looking to continue in this sandbox of small multifamilies, somewhere between 10 to 30 units. And I'd like to keep purchasing probably only about one a year because I don't want to get myself too over leveraged. So like I said, I've been doing it for 28 years. It's been slow, conservative. I don't over leverage when I do refinance. I make sure that there's still tons of equity in the property, but I'm able to grow and scale at a controlled and conservative pace, especially when I'm using other people's money.
Yeah. And what does that look like to scale at a conservative pace?
For me, it has been basically one property a year. I did go a little slower in the slowdown. So we had a very big after COVID massive spike in prices. Interest rates were super low. So during that time, it was quite easy to purchase. Um, but in a year or two after that, interest rates spiked really fast and sellers were still wanting top dollar. So finding deals that made sense didn't work. So I took a break. When it doesn't make sense, I just don't force it. The numbers have to work or I'm not purchasing it. So now I'm starting to see deals start to come down. Sellers are realizing prices have come down. And so it just means knowing your numbers and doing it at a pace that makes sense to you where you feel comfortable. And for me, one deal a year has been a pretty good pace, even though I did do 2 last year.
Yeah, absolutely. Are there any goals or opportunities you're excited about that are coming up for you?
Well, for me, the biggest thing I'm excited about is now that I'm getting older and looking almost towards retirement, maybe spending more time at that property in Costa Rica, I want to start giving back. And so I've started coaching one-on-one and teaching the younger generation things that I've learned over the last 28 years. And so what I always thought was common knowledge, I realized isn't common knowledge. And I can share that and start helping people who I find that I have a son that's 27. They're finding it very difficult to get into real estate. And with what I've learned, it's possible basically for anyone. It's the best way for the average person to get ahead in life. And so I'm trying to give back that way. So I'm really excited about that while I continue to grow my business at the same time, like I said, in a conservative manner.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
Yeah. Can you expand on some of those things that you feel are common knowledge, but others don't?
Well, I guess it's a lot because when you've done something for so long, um, well, one was an example. So I was talking to an investor that had 3 or 4 properties, and I suggested to them to get a VTB or seller financing. So in Canada, a vendor take back or seller financing. So I used the term VTB with that investor, which I thought was common knowledge. He had no knowledge of what I was even talking about. He didn't know what seller financing was. He didn't know that we could use someone's retirement savings. Someone could use that and invest in your real estate deals. So there's a lot of people don't even realize that you can use someone else's money and buy multiple different ways with no money in the deal. So a lot of these things I've learned over the years, way to structure deals, are common to me, but not common to someone just getting started or who has a very small portfolio. I can show them how to get over that hump of 1, 2 properties and get to bigger buildings and not using their money, because eventually everybody runs out of down payment money.
Right. What is some advice that you would give to someone that's wanting to get started or early in their career that you wish you had?
Yeah. So that number one thing I would say is that anybody can do this. You don't need to have money. You don't need to be super educated. It really just takes hard work and hustle, and making connections. So you can do this. It is, and most real estate investors came from modest beginnings, start small and grow from there. And you're going to learn as you go. You can't know everything. You sometimes you just have to jump at it, find a good deal and just take the plunge. So that's one thing I'd want people to know is it's possible. Interest rates are high, prices are high, but it's possible to find deals and it's possible to structure deals, even if you don't have that much experience. Once you do find a property, my number one piece of advice is to treat it like a business and to treat your tenants like your number one customer. So you're going to treat your tenants with respect if they're treating you with respect. I give gifts at the end of the year, Christmas time. I have a tenant that has paid all year or multiple years. They're going to get a small token from me periodically. When they need something repaired in a timely manner, a professional is going to repair it. I'm not going there and tinkering. If they have a plumbing issue, a plumber's showing up. If they have an electrical issue, an electrician is showing up in a timely manner. So you have to treat it like a business. Your accounting and books should be, in order. So that would be my piece of advice is structure your business properly and run it like a business, and just realize that anybody can do this. You just need a little bit of knowledge, and then it's hustle and hard work from there.
Absolutely. When you say structuring a deal, what does that process look like for you?
Well, that's a great question because it looks different on every single deal. And so that's probably my favorite part of this business is that you can structure a deal and the financing any way you can negotiate and any way that you can creatively come up with. So long as 2 people agree, you can make it happen. So I've had joint venture partners that I've come up with multiple different ways on different deals and how we structure it. Sometimes it's 50-50, sometimes it's 60-40. Sometimes the partner wants to be involved in learning and doing the day-to-day, and sometimes they don't want any. So it really is just limited by your imagination and your negotiation skills. And so same with seller financing. It's what you can negotiate or what the seller is willing to come to a win-win situation for both myself and the seller. So no deal that I have done in the last 28 years looks the same.
Right. That makes sense. So when you do value add properties, are those more of a long-term hold situation?
Yeah. So everything I do now, and most of what I've done in my career has been long term. So, and like I said, when I say long term, I mean forever. My goal with my portfolio is to hand down to my sons. So value add to me though means a little bit more than just, I'm not just buying a house, renovating it, and then adding value to it. I add value different ways. Sometimes it does mean to just clean up a unit and get more rent for it. Sometimes it means adding units to a building, finding it the building's highest and best use. I've had retail that made more sense to turn to residential. I can get more rent with less vacancies. I have a building, a 14-unit building that I added what I call a tech package. So I did all the internet for the building, and so I get more rent than my competitors get. So I was able to raise rents. That sign on the side of the building is a great example of adding value without a dollar of I didn't have to spend 1 cent. That sign company is paying for all the permits. They're paying for all the hydro, and they're going to pay me $1,000 a month for a relatively small sign on the side of my building, just because it's on a busy road. So those are the different ways that I add value. In multifamily, the best way to add value is to increase net operating income. So if you can increase the rents, decrease expenses, then you're going to increase the value. So you're adding value multiple different ways. I have sensor lights in all my buildings, so I'm not wasting hydro. It comes on when people need it. So yeah, multiple different ways, but decreasing expenses is another way that most people overlook.
Yeah, absolutely. I think that's an important piece for people to note and some strategies that they can pull from.
Yeah, for sure.
Great. Well, before we wrap up here, if somebody wants to reach out, connect, learn more, where can people find you and connect with you?
Yeah, probably the best spot is on my Instagram page. So that's where I share a lot of my videos about. I share some of the knowledge or my day to day in this business, and it's at David_Giovanniello, and that would be the best way. If someone wanted to get a one-on-one session with myself, they can do that at jointhefoundry.ca. Yeah, and so those would be the best two ways to get a hold of me.
Perfect. Well, I appreciate your time, your story, and your perspective. Thank you for being here.
All right. Well, thank you for having me.
Of course. And for the listeners tuning in, if you got value, make sure you've subscribed. We've got more conversations coming with operators who are building real businesses, and we'll see you on the next episode.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show.